Hello, Jags. Fahad here. When you look at bank stocks, financials today, what do you see, generally speaking? If you pull up the chart of Goldman Sachs, if you pull up the chart of investment bankers, Goldman Sachs, Morgan Stanley, what do you see? You see nothing more than just a declining trend for the past 12 to 18 months. Now, recently they have bounced back a little bit after their earnings report, but they're still making lower highs and lower lows. When you look at charts of money center banks, such as Bank of America, JP Morgan, Wells Fargo, what do you see there? You see exactly the same thing. You see a declining trend, technically speaking. If you go to investment advisory or if you go to asset managers, Ben Franklin, symbol BEN, or T. Rowe Price, TROW, or Raymond James, RJF, what do you see in their charts? You see exactly the same trends. Consistently declining, making lower highs and lower lows. You go to brokerage businesses, the discount brokers, Ameritrade and Schwab, what do you see there? You see exactly the same thing as well. Except one company. This is the stock we have never covered before. Symbol LPLA, LPL Financial. This actually came to my attention last week, and then I waited until earnings report was out of the way to provide more color on the stock. This is running completely against the entire sector, and it's breaking out to new 52-week high. Now, last week what happened was on January 24th, before earnings came out, we saw a buyer of 3,500 April 75 calls for $1.75 offer site. Now keep in mind, LPL never actually sees any kind of option activity. There's very low open interest. It rarely appears on our scanners. But this one was interesting, and it was just a couple days before the earnings report came out. Earnings report came out, stock blasted higher and broke out to new 52-week high on heavy volume. The daily chart, the weekly chart, that looks great. But they didn't stop there. On Friday, after earnings came out, then we saw a large block buyer of 7,500 July 75 calls for 3.75 mark. Both of these trades are now reflected in the open interest. Over the course of just a few days, they accumulated about $3.5 million worth of call options in just the last 2 weeks in a name that rarely ever appears on a radar. They were buying calls before earnings, and they continued to accumulate even after earnings came out. So let's take a look at the earnings report. Now, here is a slide that comes from the management presentation that was provided with the earnings report. You know, when you look at a lot of the banks these days, a lot of the financials these days, you see similar kind of picture emerging fundamentally in all of them. The net interest margins are under pressure with the 10-2 yield curve coming down gradually. The loan growth portfolio is deteriorating a little bit. You know, you're seeing some decelerating trends over there. The brokerage houses or asset managers in general are seeing outflows most of the time simply because of the volatility that we have seen in the market. So not over here. Take a look at this chart. Gross profit in terms of absolute terms, up 26% year over year and up 3% sequentially from Q3 to Q4. EPS diluted up 97% year over year and up 14% sequentially from Q3 to Q4. EBITDA line, same thing, up 67% year over year and up 7% sequentially from Q3 to Q4. An absolutely blowout quarter in all metrics. It easily beat consensus view out there, and the stock as a result was rewarded for sharply with a breakout to new 52-week high. Another slide that comes from management presentation, the total new assets in the company. Now, you remember our discussion back in December when I pointed out that Lipper was reporting massive outflows from equity funds for several weeks in the month of December as the market was crashing? Not over here. Over here, the Q4 total net new assets in LPL Financial actually accelerated and were up 3% year over year. Now keep in mind that LPL Financial did a major transformative acquisition in early 2018 when they bought NPH. So that is also providing the kicker to the overall growth. So so the story over here is reflective of both the organic growth as well as the growth acquired through NPH. Nonetheless, this is pretty strong, solid trend at a time when the entire market in Q4, particularly, especially in December, was showing massive cash outflows. Total Q4 net new assets were inflow of $5.9 billion in LPL Financial. You cannot point me any other financial that was seeing such a strong cash inflows when everybody was seeing outflows. Another slide that comes from presentation, and this is one of my favorite over here. The net new brokerage assets. LPL Financial is a full service broker. So it's the complete set of brokers out there. They provide the investment advisory as well, and they tailors their business to both retail as well as institutional clients. For the long time, for nearly 3 years, the company was actually pressured with a negative organic growth in the net new brokerage asset. This fourth quarter, 2018, was a breakout quarter when the net new brokerage assets actually in terms of billions of dollars turned positive, up 1% year over year. For the total quarter, they were up about $900 million. A change in character over here as well. Now, Citigroup was looking at the earnings report after it came out, and here's the note right here in my hand. And I will just point out, the Citigroup points out two particular points that stands out in this report. One of them has to do with the reflection of the second half 2018 strength. Particularly, they mentioned strongest recruiting quarters, and the CEO classified that as solid pipeline going into early 2019. And the second point that they make is the hedges. Now, there was a time when there was a lot of interest rate hedging that was taking place in Q4 with the Federal Reserve on the edge of whether being hawkish or dovish or whatnot. So the hedges out the sharp recently belly of the swap curve compression, resulting in a strong execution. This was also evident in the margin profile of the earnings report. We saw a margin improvement of more than 200 basis points sequentially from Q3 to Q4. So management in a time of very volatile markets actually executed their plans quite remarkably. Here's something interesting. Going after the earnings came out, and I'm still not seeing a lot of analysts basically adjust their estimates higher, except one analyst, which is Citigroup. Currently, if you look at the stock and you look at what the published earnings estimates are, you will find out that for calendar year 2019, the street estimates are $6.16. However, Citigroup is not waiting. Citigroup recently, after earnings, raised their fiscal year 2019 EPS from 607 to 686. The calendar 2020 EPS estimates currently on the street is $7.10. Citigroup was already above the street. They went from 737 to 793. Citigroup is now at one of the highest earnings estimates that are out there on this stock, LPLA. Now, interesting thing is that if you actually pull up the chart and you look at this, I'm not sure if it is visible over here very easily. This is a 3-year chart of the stock. For quite some time, from 2016 to 2018, the stock historically always traded between 18 to 20 times its earnings estimates. Actually trailing 12-month earnings estimates. With the recent compression that we have seen in a lot of the market, that forward PE ratio has come down to about 14 to 15 level at a time when the forward earnings estimates are actually going higher because of this impressive breakout quarter that the company just reported. If you take the multiple, if you take the Citigroup estimate of fiscal year 2019 or calendar year 2019, and you use it and you apply it on the stock right now, it's trading at about 13 times forward earnings versus historically the stock is traded between 18 to 20 times earnings. Even if we assume the case that you're not going to get some significant amount of multiple expansion in a lot of the market right now simply because of some slowing growth concerns and China trade and this and that, I think there's still case to be made that with earnings in absolute terms going up, even without the multiple expansion, the stock should continue to grind higher from here. And that's the basis from Citigroup, in which they not only raised the earnings estimates, but they also raised the price target sharply to now what is street high at $100 per share. Technically speaking, here's another chart. This is also a 3-year chart. Take a look at how the stock has been for the most part of 2018, basically in a declining trend. And this is where the breakout happened after earnings came out. And now we're sitting at a new 52-week high. A beautiful breakout on a weekly scale. I believe what's going to happen over here is I believe you're going to see a short-term consolidation for a couple months in the low to mid 70s before you see this power higher again and continue to march higher. Keep in mind, 7,500 call options were bought after earnings at the 75 strike, which is basically the new all-time high in the stock. So those bulls are quietly positioned for more upside over here. So short-term consolidation for a month or two, and then another breakout and a move to new 52-week high. That's it from me. See you next time.